Is the US government really trying to give a way out to the hedges who are heavily shorting stocks like AMC and GameStop? That is precisely what I'm going to try to answer in this video as shortly and sweet as I possibly can, guys. So please follow me and bear with me. Now, for guys, the whole confusion is coming through, this control short squeeze or managed event squeeze coming out, following the NSCC 803 rule that I mentioned, I think, Sunday or Saturday. This rule precisely is kind of confusing when you look at it because it's kind of setting up a process and they call it an SFT, okay? Securities Financing Transaction. Pretty much working like, in simple language, a storage where they are telling those hedges and those suits and those big whales in Wall Street that are heavily invested into companies like Walmart, Tesla, Google, Amazon, Netflix, Neo, Zoom, all of those big names that are kind of the weighing or making the most of the weight of the market as a whole. Okay, and because those same banks, those same market participants are also overextended in terms of margin calls. When you look at the numbers on margin calls, the numbers are way over the average, okay? And that is a good recipe for a market crash because when you look at what is happening here in China, since last week, you have 4% drop, 5% drop, 7% drop, 3% drop every single day. And, tech companies are really impacted by that because, a crackdown from the Chinese government. So if anything will happen and will have the market to pull back, especially where we are all-time highs now, it will not be a good thing for the market as a whole because those same hedge funds that are overly extended in margin calls are also heavily invested into those names which when they go up, market goes up, when they go down, market goes down, all right? So they are telling them, hey, since we don't want to have a market crash, okay, because trust me, no one wants to have another market crash following 2020, which was just 6 months ago, all right? So in order to prevent that from happening, that's why, the NSCC is kind of working with this process that I'm calling the storage, and saying, hey, since you guys are heavily invested into these companies, making the most of the market, let us park your shares here, okay? And you're gonna pay us cash money. We're gonna give you an amount that you're gonna pay for the moment that we park those shares so that if the market pulls back and when the market pulls back, you wouldn't have to sell those shares in order to create a firing sale event, which will ultimately lead to a market rapid and huge drop and sell-off, so that you can manage to avoid that. And also the market can be prevented from going through a massive sell-off, talking about 10-20% drop on a single day, on a single week. And that, I think, is what it's confusing a lot of people because as long as I want it to be, a good catalyst because it will ultimately force the hedges shorting AMC to cover, ultimately shooting the price to the moon. But, it's not a good thing for the overall market as a whole. And I think the SEC, the DTCC, the NSCC, they kind of learned from what happened back in 2008. So they want to prevent the same thing from happening. But the issue with that, okay, and the concern I have with that is it's not solving the issue because those guys are having, it is true, they're having a way out. Possibly they're having a way out. They're having kind of the government coming to the rescue because they are too big to fail. Kind of what we saw in 2008, as I mentioned, all of those big banks who were selling mortgages, okay, backed securities based on the fact that the real estate market was overextended, overinflated. People who were not even having a regular job were given mortgages, okay? And we've learned from that because the processes in getting a house now in the US has getting more strong, and thorough in terms of compliance. But the thing is, at the end of the day, it's still those big pockets, those big whales getting a way out because they are not learning. And I feel like it will not change the cycle. It will ultimately repeat this same cycle we've been on since the origins of the markets. And right now, it's not a good recipe for future generations. And that is what I think can ultimately lead to this the government is bailing out the hedges. But the thing is, in a way, okay, in a way, if that happens, AMC might be one of the biggest hedge, one of the biggest protections, one of the biggest stock where you really see those 3, 4, 5, maybe 6 digits. I'm not sure. I don't know. And nobody knows, okay? Nobody knows. Not me, not the experts on the Wall Street, even not Ken Griffin. They don't know. But the thing is, if that happens, man, you want to make sure you're on the right side of the equation this time, because when and if it does happen, you're already in, okay? So for now, I'm out.